Pretty interesting week. Let's kick things off. First things first, risk disclaimer. We know there's risk in trading. Please don't always use trade capital only. Do not trade with money you cannot afford to lose with trading stocks, options, right? Stocks, options, futures. Forex cryptos, you know the deal. Social media, make sure it's real me. And the YouTube channel, I'll post my Discord. If anybody's interested in the free group chat, and just check in this place where I put all my content. YouTube.com/Chris Pulver, Instagram and Twitter. Twitter, I'm also active on with a verified handle, real Chris Pulver. Let's get into the charts. I'm looking at the SPY this morning. We just had a gap up, close yesterday around 452 from a heck of a day. We had a big move to the downside. I think it was $6+, which is a high one. I've only been waiting for that move for the last 3 or 4 days. High to low, we had a 7. Wow, that's a lot. From high to low yesterday, $7.77 on the SPY. But here we are fighting right back like it never even happened. So I'm going to take a look at the SPY and, big levels this week. We're trading at 456 right now. 460 still remains a big open interest level for the week. I noted that in my Discord early in, I think it was Monday. Let's take a look at this. If we go into our analysis right here. So this was posted on Monday. SPY open interest levels for Friday expirations, 451 and 460. If we go to 451, we were down to 451.50 yesterday at the low. 460 might still be in the cards for something possible today. We're sitting at a couple of intermediate levels, but yeah, 460 remains possibly a hit, but that'd be the market shrugging off a lot of things yesterday. Especially, structurally in the short term, looks like we did some damage to, the lows here at 453. We took out those FOMC lows. So today could be a kind of range day. We are wrapping up the month with the final trading week or the final trading week of the month today, and then Monday's the official close. We had 3 central bank rate decisions. We had the Fed, we had the ECB, we had the BOJ overnight. Some wild and crazy action there as well. This was yesterday's currency strength chart with the Japanese yen just ripping all day on risk-off trading. Ended up pulling back a little bit towards the end of the day. And then today, here's your BOJ policy anywhere between like 11 a.m. and 2 a.m. Eastern time. And just a big, how long was that? That was 11:35 p.m. to just after midnight. So in about 30 to 45 minutes, you just had this huge, massive run in the JPY, and here we are pulling right back to where we started. So just a pretty incredible amount of volatility this morning on the BOJ news and press conference and everything. Looks like they probably didn't change much, and we're probably going to see that reflected in price as well. Dollar index caught some bid. Let me take a look. Dollar CAD is the trade I was looking at for. Yep, still hasn't broken above. I'm looking for the dollar CAD to break above 32.50 with a daily close. We tapped the alert yesterday that I had set. We just didn't have a price close above yet. Pound dollar also hit 28.08. Looking for a sell opportunity, but we're getting a pullback today. So I'm still watching this level closely to see if the dollar maintains some bid. And let me log into YouTube and say good morning to everybody. Let's see here, YouTube. And we are live. All right. And first in the house today, good morning. FK, good morning. Linda, good morning. Chris, good morning. Ruth Ann, good morning. Catherine, David, Alex, Donna, Denise, Jacob, Don, good morning. Chris and Gary, good morning. All right. Morning traders, happy Friday. Free Discord group. I'll put the link so it doesn't expire. Just give me a second here. Let's do group chat. Link doesn't expire. Put that in YouTube. There it is. Okay. Dollar index. So we came into FOMC expecting there to be some type of decision at the end of Thursday's trading. That bullish candle to me, I think that the critical level here, so there was a bit of a breakdown from the DXY to the US dollar index, which is US dollar from FXCM is right here. Okay, technically this chart is a lot cleaner to hold these support levels. Okay, this one's weighted slightly different than the DXY, but catching bid yesterday, to me, as we wrap up kind of July trading, get back into August trading, summer trading, it wouldn't be surprising if the dollar maintains its bid. Now, this technically looks really solid, but looking at the DXY, I just want you to note the importance of 100. Okay? If we break below 100 with a daily or weekly close, there's a lot of room to the downside in the dollar. A lot of room. Now, I still think that we can see dollar drifting back up to this 105, 106 level. That would maybe cool off the markets a little bit for the summer and give maybe a Q4 second half of the year a chance to rally. But I think a pause in July, a pause in August makes some sense. We might slow down a little bit volatility wise, but we possibly head back to range highs at 105, 106. Like I said, if we break below 100, then this market is gung ho on new highs, all-time highs probably on the SPY, the Qs, S&P, the Nasdaq, the Dow. I am really interested in watching to see if the Russell ends up ripping back in any way, shape, or form. The Russell has the most potential to the upside. We're going to start looking at some opportunities here. I actually might start buying some shares of Russell as well. If we get dips into 180 or 175, ideally 170 to 165, but even pull it back into the middle of this range, I could probably take some ownership, lower my cost basis down to this 164 area. There's Monday, Wednesday, Friday expirations for covered calls. I can be creative with that, and then looking to see if I can get this to reclaim highs. Now, obviously, if the Russell is going to fall, I would expect the SPY and the Qs to go as well. All right. So if we have a broad market pullback, then that gives opportunities across the board. If we don't see much of a pullback, I mean, really, it's just this day's candle from Wednesday and this week's candle. Look at yesterday's candle, by the way. So we had this huge gap higher, just shy of that 460 level, and we dropped, pretty dramatically. That could be certainly an engulfing bearish candle on the last 3-4 days, really. And now we're trading kind of halfway in between. So I'm going to continue to watch levels. If we have a rejection around this, 480 or 459 and 460 level on the SPY, we can come back and fill the gap at 452. Take a look at the smaller time frame. Is this a potential topping pattern? Take out this low, take out this low. I mean, are we setting up for that? We come back into a weekly pivot, come back into some of this demand. We have lots of levels to the downside that could just be a little bit of a pause correction-wise. What seems realistic? Let's find out. So from high to low, that's a 3 1/3% correction. We get to the possible 5% correction. Even maintaining a healthy bull market still has 3 to 5% corrections. So, and I told traders this week in the Equities on Demand trading room that if we pull back to 445 or lower, pretty interested in looking at some bull put spreads for the remainder of the year, and possibly even taking some more shares. Okay, so we might be putting in a structure top today's follow through if there is any. We could obviously just trade nowhere today and have a very quiet day, and it's just quiet Friday, quiet Monday, Tuesday, Wednesday. Wednesday was noisy, but still decent, and then yesterday was just a smooth directional day. So today's going to be something to watch. I'm certainly watching. I've got a 458 covered call on the SPY that I don't want to get called away, so I'm actually hoping it kind of stays where it is or starts to drift lower. And I'll start looking at some individual trades like long puts if I get a good direction. Qs, let's have a look at the Qs this morning. So again, gapped higher. I have my levels marked out from the. This is the Qs average around 0.9% a day. Then we get up to the 20-day average trading range around 520, 620, and 720. Yesterday, I think we ended up going towards almost $9. $9 and about 20 cents. So just a $7.70 day on the SPY, $9.20 from high to low. The trade was pretty straightforward yesterday. Once we broke that level, it was bye-bye, all the way back to gap lows, all the way back to FOMC lows. That was an excellent, $6 to $7 move. But here we are looking at some early morning bullishness. I see 66% favoring some call option sentiment, and levels to the upside for 458, 459. I will continue to watch. So I'm not ready just to throw in trades. I've had a great week already. I've had profits every day this week: Monday, Tuesday, Wednesday, Thursday. Monday, Tuesday, Wednesday, Thursday. Yeah, 4 days. So I don't necessarily feel obligated to trade today, but certainly if I get a good setup, I will take it. But I want to wait. It's been 4 solid days. I'm happy with that, and I don't like chasing things in the morning, especially in the first 10 minutes. All right, so I see some people popping into Discord. Let me say hello. And obviously, if you're in the YouTube channel, say hi as well. Hit that thumbs up button for me while you're at it. Welcome, everybody. There we go. All right. Morning, Ed. Good morning, James. Good morning, Jason. Nice to see you. Okay, so SPY, keep an eye on that. 458, 459, 460, still a big open interest level for the day. And we'll check on that. Monday's our official monthly close. Let's take a look at some other stuff. So, are we clear on the dollar index and US dollar? So, there's just a lot of potential ramifications, correlations, consequences to the dollar move. Positive and negative consequences, right? I mean, if the dollar goes up here, okay, so the stock market backs off a little bit, right? So energy pulls back a little bit, so commodities dip a little bit, okay. But dollar index back up to this level here, I'm still short, or here, I'm certainly short. So dollar has limited upside in my opinion. Doesn't mean we can't get long as far as forex trading goes, but it would make sense summer-wise that we hold these levels, we maintain this bid, and we continue to push a little bit higher and have a bit of a pause through this first, kind of first start of the second half of the year. Usually July and August are pretty slow months. September is called the September effect. It usually is the worst month of the year as far as trading equities. So, again, and none of that matters, right? None of that has to be true. But history has a way of kind of rhyming, if you will. And so I tend to, go after, if I can see multiple years of correlation, I'll look to see like, okay, well, it makes sense. And, we obviously trade in probabilities. So seasonality wise, I can see this in currencies where the dollar pulls back. And then second half of the year, once we start getting some push like late September, October, Q4 into Q1 of next year, anticipating the Fed's rate cuts, which by the way did change this week. So if we go to the CME watch tool, this is the Fed watch tool right here. The only thing that changed this week from FOMC was the probability of a pause got higher. So pause, highest probability now. This is around, it was like 40 or 50% earlier. Now it's up to 80%. So pause November. This was 30% to start the week. Now it's 65%. Pause. December, it was around 30%. Now it's 63%. Pause, right? January, pause. March, pause to cut. So this has changed, right? So pause to cut. And I was joking about this, but I listened to Powell's press conference on Wednesday, and I used the analogy like Neo when he's dodging bullets in the Matrix. I mean, he was so crafty in that press conference of basically saying, if we have to raise rates, we'll raise rates, but if we don't have to raise rates, we won't raise rates. That was pretty much his answer to everything. He didn't give anybody anything, and that's his job. So, I mean, the market didn't really like it as far as certainty, uncertainty. The market just this was Wednesday, in fact. This is Wednesday, and then post FOMC we had this just wild day, and here we are right back in the middle. So the market's still just kind of clinging to this narrative of, the market wants to rip higher. I mean, you can sense like there is a sigh of relief, this soft landing, there's no recession, things are good right now, tech is leading the way, AI hype. There's a lot of optimism just being baked back into the market. So you can tell that it's easier to be a buyer right now, but that also means that to the downside, I think if we have downward pressure, it's going to come fast and it's going to come really quickly. So we could have extreme volatility to the downside, like days like we had yesterday, where this thing drops. This is essentially a 200% daily trading range, which is, in the stock market and in a major index, that's a major move, right? I mean, percentage wise, from that high to low, that was 1.67%. The average SPY move is 0.65, so we nearly had a 3 times move for the day from high to low, right? So what I'm saying is volatility can really pick up to the downside quickly, which gives me all the more reason to, make sure I'm in front of my charts and trying to trade stuff like that because it pays very, very well. And even if it's just a position that helps me stay with better break evens, helps me profit along the way, lower my cost basis of the SPY and the Qs, that's totally fine. I'd like to still hang on to the SPY until we hit all-time highs. I think the SPY can hit 500 by later in this year, possibly if that's a benchmark or a milestone for this year or into Q1. So I'll be watching that. And just a lot of noise this morning. All right. So feel free to type in some symbols if you want me to take a look at some charts. We'll have a look here. Was it my imagination, or did he imply cuts were a year away? Probably your imagination. He didn't imply anything. I mean, he's trying to imply that there are no cuts coming ever. That's what he's trying to imply. In fact, I remember seeing on Wednesday in Financial Juice and Real Time News that I expect, inflation will be tough to get below 2% through 2025. So if that's the message coming from Powell, then why would he ever want to give an explicit detail of cutting rates? They won't. So I think he's going to try to make it sound unanimous that all Fed members are on the same page, that they are going to stay higher for longer, and right now there's going to be month-to-month data dependent. No hikes, no cuts, no anything. He had mentioned our next meeting is going to be September, which is all of August away and most of September away, right? September 20th. So we're going to have another CPI print. We're going to have more PCE and PPI and all those inflation readings for the U.S. We'll have all those things printed. We'll have two of those, in fact, before we have another FOMC and press conference. Which, by the way, the FOMC and press conference is still a pause, right? So, I mean, I think the market gets less excited about what the Fed is doing. Maybe the market has more reactions around CPI data that comes out through August and September prior to the Fed. Because now we have some gaps in between where the Fed's not meeting every month. We do have FOMC minutes, but we're not going to see a press conference from Powell every month. And I just think at this point, we just pay attention to price. Okay, gold's reaction, let's have a look. Gold's probably we're pulling back a little bit just based on dollar indecision, but I like gold to, well, again, it's correlated with the dollar, right? Dollar gets stronger, gold drops. I said in this yellow zone, that's a resistance area I'm watching for gold. Yesterday I think it was in Flex. Yeah, in Flex, I was looking for if anyone can trade XAU, I like that trade to the downside with a stop above. So heading back to this 200 EMA, possibly a breakdown even further into 1850. That would just be the dollar maintains bid over the next 4 to 6 weeks. But I think gold is pressure to the downside right now. As long as that DXY remains above 100, I think everything else is pretty contained and the dollar maintains a little bit of range-bound trading. Okay, so I think gold has some pressure to the downside. I would not be short gold if price is above 1990, but I would be short gold now with stops above, trying to target these recent lows, and there's some demand levels to chew into back here and some pocket levels as well. Silver, I still like silver bullish. I just want to see a pullback. So we have pretty strong channel support, 22 to 2250. I like gold there, or silver there rather. Bitcoin trading at 29,265. We just cracked these lows at 29.5. I talked about this, this week as well. We finally had a chart alarm trigger for the first time in about a month, and I'm just watching to see, does this structure hold? I'll actually move that line a little bit lower right here. If this structure holds, where we have a break with a daily candle, indecision right here, again, dollar gets bid, Bitcoin pushes lower. We can see this 27,000 pocket hit. We can see this lower around 25, and we can even chew into these levels down here. So that's 24 to 21. Obviously, if Bitcoin falls all the way back down to range lows, that's okay. I'm still buying Bitcoin down here. That's not a problem. We just have a 30K range to a 20K range. So range trade it. There's 50% upside. And I'd say there's a pretty good probability of that trade. And, I obviously looked at books and profits as well. So even if I was like, all right, well, I've got my overall dollar cost averaging position in Bitcoin, but if I want to trade this, I buy low, I take profit high, right? I buy low, I take profit high. If that's offered up, I would do that as many times as I can. Eventually, if we break that 32K, then let's get excited for that run to 100K, hopefully, But I think until we have, some obvious breakouts, I'd say we're still kind of range bound and tight right now with price. Alrighty. So that's dollar, oil, gold, silver. Here's oil. Oil's hanging out on the daily chart above the 200 EMA, so I'm looking at buying dips on oil. Another reason this is something we have to watch. I mean, the dollar index kind of leads the way. If dollar index maintains some strength, we'll probably see a little bit of a pullback on oil. But I still look, if we get a pullback on oil towards I think $75 since we broke out of here, $75 is now support. Okay, so we're trading at 79.60. We pull back to 75. I'm looking to buy those dips. Okay, if we pause here, I'm still looking at this to break out and go higher. All right, now again, dollar strength could pull this back a meaningful way, but I still like buying the dips on oil and heading higher towards the second half of the year. right? Medium to long term, I'm still bearish on the dollar. Medium to long term, not now, not in the next 4 weeks, 6 weeks, but over the next 6 months, I'm looking for positions to be bearish on the dollar. And oil is a big part of that narrative. If I'm right on the dollar index, then oil should be going higher. I think oil can get to $90, $95. We targeted that pivot all year, right? Once we start building this support around 65, that's where I was looking to get long and stay long. So I mean, we've been taking advantage of this in USO. It's paid pretty well, right? Really well, actually. We have 66 by 65s and 67 by 66s. We put in some staggered credit spreads that are all in profit right now. Some of our energy stocks have been doing better. So CLF is up a couple of dollars. Alcoa hanging out here with a range around 34, but a break above. We get a break above 37 to 38. Alcoa is going to rip pretty high. We've got room to eat up into the 50s. Let's see, it's FCX. That's copper. Copper's done pretty well. We're sitting in the middle of this broadening pattern that we could still be range bound, but we want to see dips. If we get copper to pull back here, this is FCX. But if we get copper to pull back to like 35 or $34, I like long. And if I get 35 to 34, we start some credit spreads. If we can get some stock, if I can own some copper and some stock back here in the low 20s, I'm all over it. Alcoa's aluminum, FCX is copper. I'm trying to think what else materials wise. CLF is steel. So some of those plays, and then we can certainly get into a couple of trades we took. MRO is a little energy play we took just this last week. So looking for upside here on MRO, 26 to 32, and then we did CTRA. That was another one that showed some promising signs of a breakout. Breakouts above 27. We're kind of in some open territory to get up to these previous highs at 35. So some of the, and look, I'm talking about stocks that nobody's really paying attention to. You're not reading about CTRA and MRO in the headlines, right? You're reading about freaking Nvidia. That's all people pay attention to right now. It's like the shiny object. Hey, everybody, look over here. It's Nvidia. Look what I'm doing. I'm overpriced at 30 plus times earnings, and I'm trading at $480. Buy me. I mean, yeah, sure. Good luck with your maybe 30 to 50 to $100 upside, but I don't think Nvidia is going up another 100%. If it does, well, I'm silly, but I'm not chasing it. So I'm kind of over the AI hype rally. I'm just looking to see where the big moves coming. Individual stock wise, big moves are coming in the undervalued sectors. So we talked about this. It's pretty obvious. Year to date, what led the way? Big tech. We know that. Crazy performance on communication services, consumer discretionary, and technology. Just crushed it. What's our underperforming sectors? Utilities, healthcare, energy. Year to date. But watch in the last 5 days. Okay. What's leading? Okay. Communication services, AT&T, Verizon coming back from the dead a little bit. Energy leading the way the last 5 days. Okay. Last month. What's leading? Energy. Financials coming back after the regional bank scare, right? Industrial's doing okay. Materials doing great. Utilities coming back in a big way. So just sector rotation. It happens, right? Everyone gets so enamored with technology and the shiny object like in Nvidia that you just lose sight of what's still undervalued and still offers a lot of upside. So that's what I'm looking at for the second half of the year. Donna Swiss yen, yep. So Denise called this out yesterday. We've been talking about this a lot the last couple of weeks. So Swiss yen, we talked about this in Flex. The 4-hour chart had a really fantastic bar count, and lo and behold, it just happened to hit it yesterday. So we had a great trade. I feel, well, I don't feel bad we didn't take the trade as a group because who the heck knew? And honestly, it hasn't done anything to actually break a sell zone. It's still in a buy zone. It's in a buy zone. It's in a buy zone on the 4-hour time frame. It's pretty obvious. This trend line here has not broken. My daily time frame is not changing at all, right? So as far as my trade goes, nothing. Nothing has changed on Swiss yen other than watching something like this. We have a low, we have a low. So if this is a potential setup for head and shoulders, what a great spot to get it, right? So we get a pullback in here. We look to see if we have a right shoulder. And if we break this neckline and break this trend line, bye-bye. That's the trade I'd look for, right? So yeah, it's still valid. I guess a simple trade would be if we break this trend line, we start looking to get short. Get confirmation, look at Masterflex, get your alignments, and then we're targeting 149 from a break around 159. I mean, there is tons of downside here. Another pair, let's look at the pound yen. Did the pound yen break 180? Kinda. Man, that stuff is slippery, isn't it? So we had this low, we had a day, basically I don't know what that window was, maybe a 12 to 16 hour window to grab some pips below 180, and that was it. What were our lows? Lows around 176. Wow, so about 350 pips to the downside, but just a like ridiculous snapback. So again, I just remain pretty darn neutral on yen crosses. I don't see the follow through right now. Even when we had, even this little sell off, even we had those 3 or 4 days in a row, which was kind of a surprise, 3, 4 days in a row selling, and we just had one day yesterday, and it's right back where we started. So I just think the yen remains a slippery pair. What could certainly help the downside move would be risk off trading. Risk off trading could help. The BOJ policy doesn't seem to be changing. If we look at I mean, I keep checking out the Japanese 10-year bond. Well, that's not nothing. Wow. Okay, so this actually is moving up. Last time we had this move here, that's where the JPY got really strong. We are moving up there again. So, you know, August tends to be a month for tops and bottoms, and if we get a breakout on this 10-year yield, we could see some Japanese yen follow through. So look, the JPYs are never off the table. We just need to find good entries, and I'm just not convinced that we have all that confirmation and follow through right now. So I'm not chasing, I'm not guessing, I'm not anticipating, I'm not scaling in. I just want to see clean freaking breaks. We get clean breaks on the yen, we can trade it. We get wishy-washy whipsaw trades. I think it's garbage. So don't be fooled. Denise says 50 to 618 retracement on the news candle. Are you talking pound yen? Pound yen or Swiss yen, Denise? Something like that. I mean, that's a deep pullback, whatever that is. Um, yeah, let's see. I don't know. Is this, high to low? This is your pullback here. That could be symmetry in all honesty. If I measure this move here and we have a high, I mean, that's probably beyond symmetry, just a smidge. But yeah, three-wave correction, I guess. I don't know. It's hard to trade. You know how hard that is to trade? I mean, you've got to be paying attention to only the pound yen and going down to like a 5-minute time frame. I mean, otherwise you can't catch V tops and V bottoms like that. You just can't. Look at that. Just that's FOMC, right? The 27th. No, that's Thursday. So we had push up, push down. FOMC would have been honestly, I don't even know. That'd be the 26th, right? 26. Where the heck's my 26 trading? Here it is. So there. I guess there's my 26. I don't know. I mean, it's just noise. I mean, it's so freaking wild. Look at this thing. So, like, even with 5-minute indicators, this is a clean sell zone, but it's so laggy because price moves so fast and then it spikes up, spikes down. It's lagging again. It's just never mind, you know? So honestly, I just go back to the higher time frame. Where's the biggest level that's the most obvious trade? And it's probably just over here. Look, if this is the lowest low and we go back and make new highs, who cares? You know, I mean, right now it's like the Bears would have to break this level. If they push up to this high, they have high, high, and it's divergent. Then we can start looking at short-term entries here to trade this on the right-hand side of the trend line. Here's the left, here's the right. We form a pattern up here. Sure, let's start paying attention to it. So I think it's all about planning and preparation with these JPY crosses. So yeah, it's wild. It really is. Swiss yen, you good on that, Donna? All right, let's take a run through. So any stocks you want to take a look at index wise? I mean, I'm just plotting out. So we're at 456. Got some levels marked up on the morning. We have a gap to fill potentially at 453. I will be watching that this afternoon. Um, Otherwise, we're kind of drifting in some open spaces. I just need the SPY to stay below 458 so I don't have to roll a call. If I do, that's fine. I can roll it to Monday and probably get out of that with some extra credit. I had 3 covered calls this week on the Qs that are all going to be full profit. Qs today, they need to stay below 388, which is way up here, which I think that trade is pretty safe. So another spot I'm watching for on the Qs would be right here. If we, gap and drift up to these levels, that gets us up towards, I mean, that'd be pretty incredible if we have this high, this low that seemed just like a face melter yesterday. And then today we have this low, this gap, and we push all the way back to the same levels again. So we have this huge gap and a huge decline, and then we have a huge gap and a huge push, and then another fall next week. I mean, it's possible we could just have a range trade. So don't have to force anything. That's my point. But if we come back up to 383, 384, that's going to stretch us kind of the highs on the day, and I'll probably start looking for shorts later this afternoon. And those shorts might actually start coming in this morning. Yesterday was trickier just because this break was happening, right around lunchtime, and I kind of hate that window. This break was, this is 1 p.m. This is 1:15. We had a break around 1:15 to 1:20 p.m. yesterday. That's not a window that I see really active. So, I mean, when it's breaking around lunchtime, I mean, it is what it is. Like it broke at 1 o'clock and it ran the rest of the day. But the participation I was looking for was here at 2 p.m. when it started to push, and I was looking, short here at 380 down to 376. So SPY, same thing. I mean, we broke right around 115, 120. The 2 p.m. break was, 455 all the way back down to FOMC lows, and then a little bit of surplus on top of that. So 455 and change to 452. Another $2 to $3 move in a couple of hours. Still pretty impressive. But the clean break was right here. We break below 457 and change, and it was just smooth sailing down for $5. Okay. Give me a sec. Okay. Catherine asking Tesla, RCL, that's Royal Caribbean, Euro Swiss James. Okay, I'll take a look at those. Tesla. Oops, it's 10 o'clock. I gotta start wrapping stuff up here. Let me go SPY. Let me go back to my bigger chart. So SPY 456 pushing higher. Let's go Tesla here. Tesla at 262, higher time frame. Um, Pretty good channel resistance on Tesla in all honesty. You know, would a pullback be justified? Sure, I'd love to see a pullback on Tesla right there. Wave 1, 2, 3. If we have a pullback wave 4, wave 5 could be our second half of the year. If broad market's hitting all-time highs, Tesla's probably going to be a part of that run. So I still like buying some dips here. I mean, we've had a decent pullback from 300. I just think if we can pull back deeper, that'd be ideal. We have a big gap in here. We've got some big demand levels and pockets around 225. We have previous resistance all the way back here at 225. So I'm going to see if I can get it. I mean, I don't have to chase it. I was in Tesla here. We were in Tesla here. So a little bit more of a pullback would be great, but this could be a simple 5-wave move where this thing's ready to break out and go higher by the end of the year. So, again, it just depends on how you're positioned. I don't really want to own Tesla. So to use credit spreads is fine. But, if I take a 265 by 260 and it goes lower, that's a losing trade. So maybe looking at staggering in. So like we could get some exposure. If it drops, 3 to 5% or more, get some more exposure, drops again, get some more exposure. With contract sizes, we could work that to be positive. But overall, I'd still be bullish on Tesla. But like I said, pullback wise, if I can get 225, that'd be pretty nice. But there's a solid channel here, right? Resistance, resistance, resistance. You can see that channel. Okay, just give me a couple more minutes here, and then I'll flip over to the trading room. Tesla, RCL, Royal Caribbean. This is one that I'm not chasing. This one's already performed very, very well. Wow. We are just ripping to the upside. I'm not chasing this one, but I'm getting the catch-up trades on the other one. 270% from the lows. Man, so I had RCL here, and RCL I wanted to buy at 22, never got it. I was looking for that equal low, we never got it. We had some credit spreads over here that we had some winners on, but man, as far as owning shares, I missed out. But the good thing is, okay, RCL is up. Look at CCL. That's Carnival Cruise Lines. Okay, from these same lows, we had equal lows here, bought it around $7 or $8. Now it's up to $17, $18. Okay, I mean from a percentage standpoint, I mean this is also up 180%. It's still slightly underperforming RCL, but I still like it, and you can see that this has room to get to 30 bucks. And then NCLH is Norwegian. That's another catch-up trade. We're trading at 21.50. We have some ownership in this one around 11 or $12. So another pretty good performer, up about 103%. So if there's more room, you can see that this one has space to get to 30 plus dollars as well. I mean, RCL can run to the freaking moon and hopefully just drags these with them. Same thing with Delta. Delta Airlines pullbacks, but I still think Delta with this breakout, had room to get to 50 plus, and it did. I'd like to see if this is lifted, Southwest Airlines, which it did, right? Southwest might still come back in this big. I mean, I'd buy Southwest at $25. JetBlue, another one that I'm in. We're trading at 776. I'm looking to see if JetBlue can clear this $10 hurdle. If we can clear 10 bucks on JetBlue, we're probably getting up here to 20 plus. So a lot of these, I'm just looking at how can I position. I like this level. I like that trade. Under Armour, same thing. I'm buying Under Armour at $7, looking to go to 20 bucks. It's going to take some time, but broader market allows these to catch up. Okay. And, better move in the broader market means probably more spending because people like the idea of their portfolios going up. Yeah. Just cruising along. There you go. No pun intended. All right, sounds good. All right, everybody, I'm going to wrap it up here for the YouTube session. I'll switch over to Equities on Demand. Thanks for being with me today. Let's keep some chats running in that Discord group. Thanks for tuning in, and we'll be back on Monday. Monday, I might just post a video. I do have some family in town, so heading out for the weekend, but I'll let you know. Otherwise, just keep the chat active. Let's get some good trades. Have a good weekend. How did we do this week? Hopefully great, and adios. See you. Bye.